Look at the financial system in China and the fact that it's opening up. What does it mean for Goldman? How much money are you putting in it, and how much bigger do you want to be in China?
Sure. Obviously, one of the most important economies in the world, and Goldman Sachs has been in China for about 25 years. It's important that the opening up continues because we'd like to own our business or take control of our business, and so economic control of our business. And so we're watching what's going on in the trade discussions, and at this point, it's talking about more opening up for the financial system. If that occurs, we'll be able to own 100% of our business, and then I would expect that we'll make more significant investments here. We were in front of our board just a couple of months ago, the team that's over here, with a 5-year plan for China, and assuming we could own 100% of our business, that would lead us to put significantly more capital into the business and significantly increase the people that we have on the ground. So,
how much more capital?
Not to be said specifically, but a significant amount, hundreds of millions of dollars of capital potentially. And when you think about the headcount, we've got about 200 people in Beijing, and we certainly could see over the next 5 years that number could grow materially.
And that would be for what, wealth management?
It would start first for our primary client franchise. You know, we serve a very, very broad array of clients across China. We do think that the wealth management opportunity could be a very significant opportunity over time, and we're starting to think about ways that we could partner with people here to build out our wealth management presence. But it's a business that we're only nascent in at this point in time.
How do you see the U.S.-China trade war developing? Are we going to get a phase one? Do we care if we get a phase one?
Oh, I think we care a lot. I think one of the big issues when you think about economic growth in the medium and long term is the U.S. and China finding a way to coexist more productively economically. I think there's a good chance that we'll see some progress on the trade discussions. I've been fortunate to speak with policymakers on both sides, and I'm encouraged. I think we can probably expect the progress to be in stages, but I'm hopeful that we'll see some progress. And I think it's important. I think here in China, the Chinese realize it's important for them. I think the U.S. realizes it's important for the U.S. and candidly for economic growth around the world, given the size of both economies, it's important for everybody.
But does a phase one deal, lead to a phase two? Does it actually mean something concrete for the world economy, or is it just a status quo?
I think that we have to hope that over time, in a world where both these economies are super important to global growth, that we can find a way to make progress on all these issues. And so certainly a step in a positive direction is a step in a positive direction. And, I'm a glass half full guy. I'm going to assume that since it's in China's interest, it's in the U.S.'s interest, it's in the global economy at large, it's in its interest to see this progress, that we should see progress over time.
If you see an opening of financial services, how important is it to be one of the first big banks present in China? Do you have a first mover advantage?
Well, we've been here for 25 years, as I said, and I don't know how this license process, there are a number of firms that are applying to take economic ownership of their entities. I would hope, given the commitment we've made to China, that we'll be earlier first. But I think what's more important is the long-term investment we have made and that we continue to make here with a medium and long-term view to better serve our clients.
Talk to me about Hong Kong. You were just in Hong Kong and you postponed a party there.
We have been celebrating around the world this year the 150th anniversary of Goldman Sachs, and we've been having events in cities to celebrate or commemorate that with our clients. And so we did postpone an event in Hong Kong, but I spent some time in Hong Kong, and it's a very complex, multi-layered situation that we're watching very, very closely. I was glad to be in Hong Kong and spend some time with our team. We have over 2,000 people on the ground. And I would say that when the routine that people experience in a city like that is disrupted, it's tense. And so I would say it was tense. It was quiet. There weren't as many people out on the streets. You can clearly see the impact on the economy. And so we're watching this very closely and hoping for a resolution because I think that's good for everyone.
What are your clients in Hong Kong asking of you? Are they opening offshore accounts? Are they diversifying?
No, I don't see any change. I don't see any change in the behavior of clients that are significant financial players in Hong Kong. What I would say is that Hong Kong has always been very, very important as a financial center across the Asia-Pacific region. And I think China recognizes the importance of that. I think the rest of the world recognizes the importance of that. And so it's going to be important that we find a resolution to this in the near term.
But can it actually lose its status as an Asian financial hub, and who will it go to?
I don't see that as likely. I don't see evidence of that. But the situation needs to be resolved, and obviously for the people that live there and are affected by what's going on, this is a challenging time.
Talk to me about Marcus.
Sure.
So you've just rolled it out in Japan.
No,
right?
we haven't.
You're
we
about
haven't,
to?
No, we haven't, and we're not about to.
May in the future.
Well, we may in the future. I'll go as far as that we may in the future. We're building a digital bank digital consumer bank that's primarily at the moment focused on the United States. We have taken some deposits in the UK, but at the moment we're primarily focused in the United States, and we're quite excited about the progress we've made over the course of the last 3 years. We've built a digital consumer platform that has $55 billion of deposits, has 4 to 5 million customers, has about $7 billion of loans. We've built a credit card platform with Apple that we're quite excited about, and also allows us to partner with others in the future. And so we think we have a very interesting, disruptive platform that allows us to help consumers with their financial needs in a digital format with more transparency, more information, less friction, and we're excited about what we think we can do over the next 5 to 10 years.
So this is new clients, younger clients, or do you cannibalize your existing clients?
No, it's really a different business for us. If you think about Goldman Sachs over a long period of time, we had a very high-end wealth management business, but we really haven't dealt with the everyday consumer. No. And so this is a new business for us. When you look at the client list that we're attracting, there are people across all demographics, all ages. I think there's no question, I have kids who are in their 20s, and there's no question they're very attracted to the digital applications and the use of ease. They're not typically walking into a more traditional bank branch or using a more traditional offering. But there are people across the age spectrum that are intrigued by what we offer. We offer attractive deposit rates. We offer less friction. And we're trying to develop products that we think will make financial life easier for consumers with less friction and more transparency.
When will that be rolled out in Asia?
I can't predict when and if it will come to Asia. We're focused on building a really good business that's primarily based in the United States. And as we make progress, we'll think about whether or not it makes sense for us to expand in other places.
So you mentioned your partnership with Apple. A couple of weeks ago, it came under pressure because of an algorithm that was gender bias. First, when did you hear about the news, and what's the next step in how you can fix this?
Yeah, I'd start by saying that we're very excited about the launch of the credit card. This partnership with Apple has allowed us to offer a credit card that we think gives consumers more information, more flexibility, the ability to do more digitally, and the launch of it by any standard has been the most successful co-branded credit card launch to date. There is no gender bias in our process for extending credit. We don't ask whether when someone applies they're a man or a woman. We don't ask if they're married. And in addition, when we set up our credit processes, as is required under law in the United States, everyone brings in to all credit card platforms a third-party consultant to make sure there are no unintended biases in that process. You just used the word black box. Actually, when you look at our credit process, any individual that applies for the card, we can go look at the exact specific characteristics of why a credit decision is made and communicate with them about that credit decision. And so one of the things we're trying to do is increase the transparency, and we're going to continue to work at that.
So there was no bias?
There is no bias. There is no bias. Now, there's no question that different applicants can get different results, and that can be for a variety of reasons. But we're working, and we're going to be very focused on making sure people understand that when they apply individually for credit, there are a whole variety of factors that go into it. Gender is not one, but it's their individual credit. And we're going to work over time to do more to deliver transparency to our clients, because that's one of the things that we like about this credit card. How can you have more information? You go on, you apply, you're immediately told what your credit line is. If you don't like your credit line, you can call someone, talk to them, give them more information, and there can potentially be a change. So we're excited about that transparency, and we're committed to working with Apple to improve that transparency so that it's a unique and differentiated product.
Do you worry about liquidity in the markets? So I don't know if it's linked to repo or just liquidity looking a little bit funny as we go towards year end.
I just spoke on a panel here, and I don't know if you saw it, and that's why you're asking. But I was asked if there was some stress in markets over time, what would you be worried about? And I did raise liquidity. There's been significant shifts in market structure and regulation over the last 10 years. We haven't had a lot of market stress. And so one of the things we think about a lot from a risk management perspective at Goldman Sachs, if there was more market stress, where can there be liquidity issues? And I do think the events in the repo market, just a month ago, are an indication of the fact that when market structure changes, and then for some reason the supply-demand dynamic of markets changes, you can't have tightening liquidity. So that's certainly something to watch and something we're very focused on.
But can you protect yourself in some way if it happens again?
I don't think it's so much about Goldman Sachs protecting herself, but it's generally speaking, investors buy liquid securities, they participate in markets, and they're looking at the amount of liquidity that's available for those products today. And I think one of the things you have to do as you risk manage and you think about what you own is in a period of stress, I think you have to expect that there's going to be less liquidity, and you might be in a position where you have to hold assets longer than you might necessarily like to. And so you have to have enough liquidity to protect against that for sure.
So apart from liquidity and the trade war, what else worries you? Is it shadow banking? Is it investors looking for yield and therefore taking too many risks, or is it something else?
It's my job to worry. It's my job as we think about our clients to worry about things that can affect our clients. But all that being said, I actually think in a lot of ways the environment at the moment is relatively benign from an economic perspective. In other words, in the U.S., the U.S. economy is doing quite well. And in fact, Jan Hatzius, one of our lead U.S. economists, was out in the last 24 hours talking about the fact that we might make some progress on trade and monetary policy has been more accommodative. He actually is expecting in 2020 a slight acceleration of growth from where we are. He's turned a little bit more positive. He also commented on the fact that he thinks in both the UK, given there's more confidence now that there'll be a path out of Brexit without a very abrupt bump, could see a slight acceleration in economic activity. And also if you look across Europe, maybe an improvement in what's been slower growth.
Yeah.
And so, economically, I think we're doing okay. I can give you lots of things that can change that.
Is there anything that's positive out there? Because what you're describing is things that are getting less bad.
The world's growing at 3.5%. That's not bad. And, I think you have to, everybody's looking for what's wrong. There are a lot of things that are going well. Are there issues? Sure. Is there uncertainty? Yes. Is the China-U.S. relationship and trade tension a headwind to growth? Yes. Do we need to make progress and find ways through it? Yes. But if you step back at a high level, things are going okay. The economy's moving forward, and there are lots of issues. There are lots of issues in political processes that need to be discussed and dealt with. We all can find places where we need to do better, but generally speaking, from an economic perspective, we're doing okay now.
Okay, so given all of that, how do you see Goldman Sachs in the next 5 years? Where are you putting your growth on? Where are you putting money in? And
Sure.
are there units that you're retrenching from?
Sure, we've talked a lot about this. We've talked a lot about the fact that we're trying to find opportunities to continue to grow our client franchise and our business. We're focused on obviously strengthening our core existing businesses that we've been in for a long time, our investment banking business, our sales and trading business.
Through not through acquisitions?
No,
but
for
through
looking
hiring?
for places. No, looking for places where we can make investments. In any business, I think there are gaps where you're not performing where you'd like to, and I think the discipline of going and saying, what's our market share there? Can it be improved? How can we improve our position? We do that in all our businesses all the time. The significant things that we're doing is that we're focused on building a digital consumer platform in the U.S., as you and I talked about. We're focused on expanding our wealth management capabilities to a broader audience. We made an acquisition earlier this year that's helping us move in that direction. And in addition, we're adding certain products and services that can serve our existing clients. So an example of that is that we've built a transaction banking platform, a corporate cash management platform that the firm is now on, because we used to be a client of that service. And we're going to invite clients onto that platform in the first quarter. So we're making steps to expand our client franchise while adding some new businesses that we haven't traditionally been as focused on.
Talk to me about 1MDB. When is that going to be resolved? What kind of time frame?
I've said, repeatedly as I've been asked, and I'll say it again to you, that we're trying to resolve it as quickly as possible. But other than the fact that we're working and doing all the things that we can do that are in our control to resolve it as quickly as possible, there's not a lot else that I can say about it at this time.
I mean, the figures that are floating around are anywhere between $2 billion and $3 billion.
All I can say is that we're working to resolve it as quickly as we can, and we'll be happy when we can get it behind us.